We're live on YouTube also. Mundia, welcome, 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 brother. Welcome, brother. Let's hunt down some synthetic pairs. V75 to be precise. Who is ready? Let's try and get some pips on V75 or any other ready pair. I want to believe that meant how have you been or where have you been? I've been around. I've been around. I've been around. I've been around. I've been trying to survive that first account takedown. And okay, okay. How have you been? I've been okay. I've been okay. I've been okay. I've just been low key trying to figure out how to do things better. Well, we're back. We're back. We're back. We're back. And it's going to be better. Trust me. It's going to be a lot better. I'm sure most of you are wondering why I'm showing my face here. Well, TikTok says that if you're not a scammer, you must be showing your face from time to time. So now, I guess that's the new way, and we just have to abide. But that's not what we are here for. I'll still switch to my screen in just a minute. The links to YouTube and Twitch is already posted. I'm also sending the TikTok link now to the group so that others can join. Come on, to share again, no problem. POD. I want it. Let me share me the link to that. Okay, all right. VFX trades. Okay. We I quickly share the link to this Telegram group so that we will continue. Now only ah, now only the shirt I get. Now the shirt I like to wear now. And the one I like to wear. Okay, let's get started. Let's get started. Let's see what pair is most promising, and let's begin from there. Ah, now my system is lagging again. Already two people on YouTube. Welcome, guys. Thank you so much for joining the live stream today. And enough of this, my ugly face. Let's switch to the business of the day. I was just trying to set things up. So, what's up? What's good? What's good with everyone? Many people might be wondering why I've not been trading. I've not been actively, dropping signals like I used to, or what has been going on. Why so quiet? Why not attending to people in the group chat? All these questions we have to answer them today, here and now. All right. So it's not like I've changed. It's not like I've stopped. It's not like I've run. Or maybe I'm going through something that I. Okay. Everything is fine here. So or maybe I'm going through something that I cannot, you know, run away from or any of that. No. Fact is, I've been cooking and I've been trying to make things better. I keep saying that every day. I know that's already a story now, but that's the reason why I've not been dropping signals too, because I don't want to be distracted and giving you guys signals that you know is just going to help you blow your accounts or not give you a consistent form of trading. Although a little bit of some synthetic trades that I've been taking over the week, I've been posting them on Twitter as well as a Telegram channel. Unfortunately, they were not signals. They were not signals. I did not give them out as signals. So many people did not benefit from them. And I'm very, very sure that a lot of people who actually saw the end result were actually mad that I did not give it out as signals. And then I am showing the profits. The type of pain that some people just get. But that notwithstanding, we are going to be resuming our signal posting today from this live section. Every trade that I start taking, because I decided not to even do anything beforehand before coming on live. All right. So I'm not in any trade. I'm not in any trade right now. As a matter of fact, I've not done analysis for the day. I've not touched my computer about trading for the day. So we are just going to start together. And from now, any trade that I see, the signals are going to be going to the Telegram channel as we usually or as we're used to. All right. So everything is just going to continue like that. And please, if you are here, please like the live, because if it is just one person who is liking, or a few people, or a few percentage of the people who are in the live section, if it's just a few percentage that is liking, TikTok tends to think about it like we are just wasting their server space, and they'll just take the live down to make room for other people who will make them money. And you guys know that forex traders, they don't really get gifts that much, because everybody just assumes that you're a forex trader, you are rich, so why do I need to send you my money? Yes, that is true. I mean, someone who claims to be rich should not really need your flowers, right? But the problem is, live money making is not just about the creators, it's also about the um, TikTok algorithm itself. TikTok is in this business to make money, and you guys know that. As a matter of fact, it's only like 30% of whatever is gifted to the creator that actually goes to the creator. All right, so they take a lot of the percentage of the money that they are making from the gifts that is coming to the creator. So they like to see live sections where people are actually gifting so that they make money. So if your own is just boring, no likes, and then no gifts is flowing, every now and then they keep bringing up that thing says this live is going to be disconnected due to inactivity. So please, if you don't want us to be, turning off from time to time, if your hands are not busy, like, and if you have those flowers, you can send them through. Don't say it's a forest trader, it doesn't need it. So I just explain everything that the reason why those gifts are necessary. So for those of you who can should always gift. I think that's all for now. Let's get to the business of the day. Let's start analyzing the pairs. And I think the sections are even is 4:49 my time. So almost all the sections are either dead or consolidating right now. So it's a very good time to do our analysis and to get ourselves familiar with whatever it is that the market is doing. And from there we'll see what the market has for us today. So let's go. Oh, sorry. Let me set this thing. So why is it's in the command? I think this should be okay. Be okay. Yeah. That sounds good. Be okay. Yes, sir. That's all that matters. Carry this thing block my forehead. All right. So you can feel free to drop your comments, whatever it is that you want me to look into. Um, just based on culture, we'll start with gold. Today, I just want to start. arranging my our watch list and everything. So we are just going to start with gold, and as time goes on, we proceed with whatever request that anybody has, in the comment section. Whatever request that anybody has in the comment section, as time goes on, we proceed with that. So here is gold. Kelly Blinks, hey, what's up, man? What's up? What's up? What's up? I'm good. Guys, don't forget to like, okay? Don't forget to like. So if you guys remember when we were on this live section, the last time that I was live, we did this analysis on gold. All right, you guys remember that should be like 2 days ago. We did this analysis on gold, and I said that there are two places where you should expect a sell from. Like if it's during the news, you should expect a sell from this up, because that would be like, since it is coming from the external, all right, since it's coming from outside the range of this one, then definitely the inside liquidity should be taken. But if it wants to continue going down, following this current trend, all right, following this current trend, then you could expect a reaction from this zone, all right, above this liquidity. And if I should go down to like 5 minute time frame, you see that even before breaking it, there was that reaction somewhere there. All right, you can see now that before breaking it, there was a reaction to that point. All right, there was this reaction trying to take the market downward at this level. All right. So now news came out, and this is what we got. I was not on the chart, but I can see that this trade was actually a successful one if you expand it, because on the 1 minute time frame, give me a minute here, collapse this. My PC is a little bit laggy, but we'll get it. All right. So if you observe, you see that this trade actually went up first on the 1 minute time frame to tag in that position. So if your broker was one of those brokers that allows you to enter into this trade during the news, then if you had limits set for that analysis that I gave, you probably would have made your 1 to 5 on that particular trade. All right. So you can see it was a 1 to 5 projection, and it actually hit during the news. Although I was not here, I was not on live, and I was not trading at all. So ever since that last trade, ever since that last withdrawal and that last trade, I have not actually entered any trade because I've been busy doing some one or two things on my own, and that's the reason why I have not sent any signals to the group so far. All right, that's the reason why I've not sent any signal to the group so far. So that was the trade, that was the analysis, and let's explain or try to digest what have actually happened and why the market would have done that. All right, so you guys know that we always say that even during the news, the market has an objective that is always going after. So when you see all those crazy manipulations that are happening, you might think that the market does not, like, is just being manipulated for no reason. But even during manipulation, there is always levels where it respects. That's what I'm trying to say. There is always these levels where it respects. It's either an objective to go and carry or to go and take out liquidity, but where it has to react from, it always reacts from. Because looking at this now, you might think that this is a losing trade, all right? But when we went down to the 1 minute, you saw that it first of all went up, took this one, then went down, fulfilled that objective, and then came back up to come and take two of them as liquidity, I guess. Because if you see now, it will be like, okay, so it came back to take this liquidity, tap into this position. Then, since this area has been mitigated, it came back down to take it as liquidity. So you might not be paying attention to this, but this low that was protected before was already mitigated. All right, like the market has reacted to it already, so there is no reason why you know it should want to come and respect this area anymore. Instead, it used everything in that region as liquidity. So now here you can see that it came down to take this area as liquidity. Stop touching that thing. All right. So it came down to take this as liquidity and then went back up to also take that one as liquidity. These are areas where you expect that there should be passengers or whatever you want to call it, liquidity sitting in the market. That is what the market is doing, regardless of whether it is news or it is you know any fundamental event at all. The market is still going after one liquidity or the other. All right. So that is what it has done. Now, what can this move tell you? It tells me that there is a break of structure to the downside, and the market is very heavy on going downwards. All right. Where could it be going? Well, for starters, we have already projected that before. All right. That is why I always say that if you are doing your analysis, always have projection for not just one, but like two or three moves ahead of what you are looking at that moment, because that will tell you where to target, where to take TP, where to enter, and also where to exit. All right. That's way you don't get stuck in looking for some unrealistic, like RR. You enter a trade that could do well when you target 1 to 3, you are targeting 1 to 7, and eventually the trade is just going to keep frustrating you because it has to do what it has to do. It has to go down, come back. Like, let's say you took a buy from here. Let's say you took a buy from here. Yeah, let me say this one. You took a buy from here. Realistically, let's say your stop loss was somewhere around here. If you were looking for 1 to 3, you could have gotten it like around there. You could have gotten the 1 to 3 easy peasy here. All right, and just wait for what the market is going to do next. Right. This is what you would do on a normal day. This is what you do on a normal day. But instead, sometimes we tend to be looking for some targets that are unrealistic. So, for example, we are looking for this on the first breakout. It has not even done a change of character. You are using like first contact to make an entry, but you are looking for your total TP. Now, while that might go to your total TP at the end of the day, look at the frustration that I'm talking about. It goes to 1 to 3, come back to almost zero. At this point, maybe your trade is already set to break even. All right, maybe your trade, you have already set it to break even. It will just come back and take you out at break even simply because you did not secure when you were supposed to secure. This would have been a second entry opportunity for you, but because of your greed, or because you were targeting something unrealistic, you decided to stick around, and now the trade has come back for you. You probably would have set your trade to break even here. It took you out at break even and then went your way. And you know what that is going to do to you? It's just going to make you start looking for trades where there is no trade, because during this period you probably stayed calm until the trade did everything that you wanted before you entered the trade. But because you had an unrealistic target, this happened. All right. Now the second thing now is it keeps you in a loop for way too long, because all these things has to happen. Even if the market has to go from point A to point B, you still need to respect zones, right? You still need to respect zones, because all these things that you are seeing, you might see this one as like a break of structure to the downside, but because the low or the high that is contained inside here did something significant, like going back to take liquidity before breaking structure to the downside, you don't just see a high or a low like that is that strong. All right, a high or a low that is so strong that was able to push the market to go and break a structure. You don't just expect that the market is just going to come at it and just break through it like there is nothing. And that's why I always use this thing as entry opportunities, because I know that for a load to be this strong to print out this level of movement, I can take that as an advantage. So even though I am trading against the market, I can be like, okay, I expect at least a reaction, and that reaction could be able to give me like a 1 to 3, all right, in the trade. So for example, you know that this market is in an uptrend, and then you take a sell here because you are expecting just a 1 to 3. Like, you understand? You enter for a 1 to 3, you get your 1 to 3, and you get out. And that is why when I'm taking some trades, some people are always asking this question: why are you selling when the market is buying? Well, you don't see what I am seeing. That's the reason. All right, I might be doing something, I might be looking stupid, I might be taking a trade and it's looking like you don't know what you are doing. But if you really understand what the market is doing, like the structure of the market and how the market is moving, or the targets, the objective of whatever move is happening in the market, if you understand all these basics, then entering the market at some strategic point becomes very, very easy. It looks stupid to every other person who doesn't know, like, the idea behind what is it that you are doing. All right, so this is how you are able to get all those internal structure, whatever. I keep using all those. This one is internal relative to this one. This break of structure is only valid relative to this one. Yes, there are some break of structure that are only valid relative to some places. All right, so for instance, let's use this as an example. You have all this formation, all right? You have all this formation and a liquidity that was sitting right here before the market had to go and print this, all right? Now, a lot of people might have already started seeing a liquidity grab. They might have already started calling this one a liquidity grab. So they put their liquidity sign there and they are expecting a break of structure to the downside. They're expecting a break of structure to the downside. Now, what do you see? You see something like this happen where the market goes below this one. All right. This lower leg that you have internally here. You see something like this where the market eventually come and goes below the lower leg that you have internally here. All right, and then they call it break of structure or change of character. Instantly they are now looking for sales. They are now looking for sales when the market comes, to what they will call order block or whatever. All right, anything that you want to call it, you can call this order block, POI, whatever. And you see what the market will always do. It gives you that sign, it gives you that inducement that is going to go down. But what you failed to understand is that this low, no matter what you think about it, is still contained internal to this one. All right, it's still contained internal to this one because if I draw a line from here, all right, give me a second here. I draw a line from here and I draw a line above there. Everything that you are seeing inside this zone, all right, let me compress it a bit so that people who are looking on different screens can see. All right, so everything that you are seeing within this zone, and I'm talking within here to here, is still hosted inside this point A to point B. All right, so all these things are liquidity when the market is coming from the outside of this zone. The low that should not be broken is this one. All right, this low is the one that should not be broken. And now, since the market has decided to go above that one, when it is coming back, since it never took care of business behind it, when it's coming back, what you notice is that it will come and use all that as liquidity, just like it did here. All right. So what you are seeing as a break of structure or a change of character is just a trap for you to get in. All right, a trap for you to get in for yourself when the market will just give you a sign or an inducement that is about to go in your favor, and then boom, it just takes you out. This is something that I've been dealing with a lot of times. Forget the fact that I am talking about it like this, it still deals with me every day, every time. All right, so I take a trade, I sell the full confirmation, but then you just leave one little thing that you are not paying attention to simply because you rushed. All right, you rush to conclusion because you saw this, okay, you should not go. So like, when we draw those fancy bosses, we draw it like this. All right, we draw it like this and then we'll be like, okay, this is it. All right, and that's why these days, if you want to see me, if you see me trying to take a trade, I'll always look out for a zone that actually breaks structure because that is the only thing that I know, and that is where I started getting this idea of, okay, anyone that is able to take care of business should be the one that you should respect, not the one that did not take care of business. Because if you are too weak to take care of business before going up, like this is what I'm talking about. This high that broke this structure, this high that broke this structure did not take care of internal liquidity before going up. All right, let's say it was the last candle inside here. Let's say it pulled down, it pulled down. My bad. Let's say it pulled down from here to here. All right, pulled down before going up. It makes it strong, just like this one. Now you can say, okay, this one came and took all of them as liquidity. All right, took all of them as liquidity now. So you can call this one liquidity taken. All right, it took both internal and external liquidity and ended up breaking external structure. All right, took external liquidity, breaking external structure. So every other thing that you saw here was internal. This is just an internal joke. All right, playing around, giving you signs that it's about to go in your favor, but then it will never go in your favor. But now that it has taken external liquidity and taking and breaking structure externally, and you can see all the reactions that you expected. So this is like a reaction, the last reaction before the break of structure, meaning everything else that is under this area becomes liquidity. Just like this high is the last reaction to this one. All right, so let's say there was a break of structure down there. This was the last reaction, all right, to this one before there was a break of structure to the upside, right? It becomes liquidity the same way this also becomes liquidity. All right, becomes liquidity, and anything below it becomes like a target. All right, so you call them passengers or whatever you want to call them. So this is what the market is targeting. So now when the market pull back into this area, you can easily risk some percentage of your account because it did everything, all right, that you expected. Now, why are you risking your money here? The reason why you are risking some money here is because you know that the fact that this one was able to take care of business before breaking structure makes it a strong blow, which means it's going to put up a fight when the market is coming back down. It doesn't mean that with all these things that you have done, it's a confirmed thing that the market must go in your favor. But what just that means is that if I am going to risk my money, let's say Mayweather was fighting uh, a new athlete that is just coming into the boxing game, and there is an odd for Mayweather and there is an odd for the new athlete. Which one will you choose? All right. So you definitely are going to put most of your money on the new athlete, knowing fully well that in some cases or in some scenarios that we have seen, that even the new athlete might be able to, like beat the old and more experienced athlete. But the I say outlet, what's the name again, Seth? Contestant or whatever you want, athlete. All right. So you know so well that a new one can actually beat the old one, even with all his experience. But your odds are always with the experienced one. That is what you are saying. So this one being able to take care of business before breaking structure makes it a more reasonable place to bet your money. So now you know that you are expecting a reaction at least, or you know that you're expecting that this zone is going to put up a fight. All right, you know that that is what you are expecting. So you can risk your money. Let's say I have $100 here. I can comfortably put in $10. All right, for a trade, my stop loss is below this zone, maybe a little bit below the zone, because sometimes what you might get might become a contest, something like this. All right, that is the market showing you another sign of weakness that is about to go down even more. All right, but we explain that later, more on that later. But for now, you just put your stop loss a little bit, let's say a pip or two below your final candle, and then you target like a 1 to 3. Now, my target originally will be, if there is a break of structure, if I see a break of structure or a break of structure that proves to be another strong zone, and we have just described strong zones a minute ago, and the strong zone that we are talking about here is any zone that is able to take care of business, i.e., take liquidity or clear liquidity before breaking structural low. And what do you mean by structural low? A structural low is a pullback that is not just one structure. Look at this. It's like a structure on its own. Pull up. What's this one? So look at this one. It pushed up, push down, pushed up again, push down again. So it's not just one push down like this one. This one is a one push down, so it's not a structural break or structural formation. This is just a push down to for continuation. But this one, push down, push up, push down, push up. So it's like it's following another internal structure there. So any liquidity that is taken above a structural pullback and then is able to break the structure to the downside. So I call it change of character now because it's a structural pullback. All right, took care of business and then was still able to go below that low, which have already taken care of business before. All right, internally. All right, it did that. So even though this is going to go up, it should have a resistance around this level. Like it should react around this level. And me, I like to put my entries, or I like to look for my entries above the first reaction to that zone. So when this market is coming downward, right? If you wanted to continue going upward, if you draw a box, your box will be around this. If you draw a box, right, your box will be around this last order block. Right, this is where you expected to take a buy from if this market was supposed to remain in a buying condition. So this is where you expected to take a buy from. All right, a violation of this low is what is making you even consider this area as a strong high, right? So if this market was to continue in this format after a break of structure, you expected the continuation from here. So the last reaction or the last pullback in this zone, all right, the last pullback in this zone becomes my liquidity to target. Becomes my liquidity to target. So in this case, if I go down to like 5 minute time frame now, you will see that. Let me see, where is it again? All right, so this it should be around this area. All right, so quickly, all right. You can see that reaction. It tapped on that box. All right, let me move this aside so that everyone can see. So you can see that this first reaction here, it tapped on this box and gave that reaction. So this trade, whether you like it or not, was a trade that went for a one-to-one. All right, let me zoom in. I hope that everybody is seeing it clearly. So if I bring this in down, you can see that this trade actually went for a 1 to 1.3. So like it or not, it's already a successful trade in a way. Some people are out there trading for one-to-one. All right. So regardless, this one has already gone one-to-one before pushing back down. So me, I like to use that as liquidity, because that is what shows me that this low was actually respected, meaning it was a strong low. A violation of a strong low tells me a change of character, right? So I can now put my liquidity line above that one. That is why I always put, my boxes or something. I was using lines before, but I noticed that boxes helps me to also show both the beginning and the end. So if I wanted to trade with respect to this one now, let's say I was using line, I would have, entered the position and then look go sometimes, and sometimes it's far from where you are trying to target, right? So I'll have to look back to see where my stop loss will be. I'll be looking for it and all that. So instead I started using boxes. But what that means is this is the liquidity that you are targeting, and your entry will be above that liquidity, stop loss above there. The reason for that is the fact that it was able to go and violate a strong low that should have continued a structure gives you the idea that this thing now is going to at least give you a reaction. All right, and that is where we were waiting for the market to return back to the other day. Okay, and that is the reason why the trade that I forecast here, I said you should look to terminate it here or take some profit here. I remember the guy that asked for that gold buy that I did this analysis, I said take some profit here if the market is reacting, because now that this one has broken structure to the downside, it makes it a contender, a strong contender. It's trying to tell you that me too, I am strong and I'm going to battle it. And you can see that at the end of the day, the bad thing here is that this one never came to our entry. It never came to the entry. All right, all right, and then we finally got broken to the downside. That is now telling you that you are in a new trend. All right. Now, regardless of whether it came close or not, I still had that projection open there. That is what I just explained before. All right, and then the news came out. The news came out. If I bring this one back here now, you see that it tapped into it, gave that give me a second here. All right, so you can see this trade, it came back up, tapped into it here, and went down before coming back up to end and close above that area. So this trade, whether you're liking it or not, the trade was still a successful 1 to 5. All right, and what was it targeting? Liquidity again. So the market is moving from point to point, and though you cannot predict all the points where the market is going to touch, though you cannot predict, you cannot tell where exactly the market is going to end. At least if you try to do it like a couple of times and you follow all the rules of looking for where liquidity is, what is a reasonable liquidity, and you are selective with all your like analysis and which trade you are going to take, once a while you are going to get a good win. And when I say once a while, I mean like maybe 2 out of 5. All right. So if you are guaranteed of 2 out of 5, 2 out of 5 is 6R. If you are risking for 1 to 3, that's 6R. And then you lose -3, you are still up with 3R at the end of 5 trades. So if you just get 2 wins out of 5 trades, and with this level of care and selectiveness that you put into this particular strategy, you can sometimes you can even get 5 out of 5. All right, and in most cases you we get like 1 to 6, 1 to 7 RR on the trader, and that's why it's very very easy to flip little accounts and make it into big something. And though I am not yet rich because I never get balls make I dey put in big money yet, at least it is coming out nicely. So for I don't come up from analysis now, I don't use and go teach everybody my trading strategy. Abi? So now that this trade there is a break of structure to the downside, I'm going back to analysis now. I'm done yapping about trading strategy. If you get the point, um, congratulations. And if you don't get the point, well, it is what it is. We go move on still. Now that the market have broken structure to the downside, regardless of where it is reacting from, I just know that if the market is coming back, it should give a reaction within this area. All right. So when I see a change of structure when it comes back to this box, I am looking to take a shot. All right. Because regardless of where the market is going, or where the market is, or what the market is doing, you should at least give a reaction to any strong low or any strong high. That is the basics for this particular trading strategy, and that is why I always call it price action. All right. And it's a strategy where you can never get enough of it. What I mean is you can never be too perfect with it, so you are always refining it. And the best thing about it is the more you look, the more you see, the more you take losses, the more like you run into bad experiences with a strategy, the more you can learn from your mistakes if you're actually not looking to jump from one strategy to another. All right. You guys that have been following me from the beginning of this our live section, you will know that I always talk about um, the same thing, but every now and then you see a little bit of a refinement, trying to see if I can make it a little bit more precise, or if I can avoid more losses. All right, like if I can reduce the number of if I can be more selective with which trades I'm going to take and all that. Okay, so now these are scenarios where you can jump into problems. All right, there is this clear of liquidity. Yeah, first clear of liquidity. All right, and I will call that a break of structure to the downside, and I will zoom in to see where I will look for a trade from. Something like this, I will definitely be looking for a selling opportunity from here to here, because it's the final pullback into the zone. The final pullback into the zone, I'll be looking for a sell from this area. All right. Now, this is a clear case of where you could actually run into a problem, and why I say you could run into a problem is that if you used direct entry, let's say you were entering based on limit order, you probably would have been tagged in there. All right, you would have been tagged in there. Stop loss would have been above this area, and then it took you out, and then it went your way. And this is where waiting for confirmation becomes a very, very, very serious thing to do. So first of all, you have your when the trade is coming from outside of the zone. Yeah, so this is the zone that I'm talking about. From up there all the way to this down here becomes a zone, because it took care of business in a way before breaking structure to the downside. And if you guys were paying attention to all this, you see that the internal structure got broken somewhere around here. All right. And after internal structure breaks, you expect internal liquidity to be taken. But since the market is in that particular order, like the structure is going downward, what you now see is that okay, after a break of structure, you expect a pullback, and you probably would have gotten this trade done from here. All right, you'd have gotten this trade done. Maybe you wouldn't have gotten in because you'll be looking to enter at the premium at this level. You'll be looking to enter at the premium at this level. One thing you will understand also is that if you were to go down to a lower time frame, this also took care of its own business before going downward. All right, and I've been talking about this a long time. It's still something that I'm still finding ways to refine. Something that I'm still finding way to look which one I can select from. Sometimes it makes me miss out on good trades. All right, so for example, when there is a break of this structure, I probably would have been waiting for it to pull back to above this one, because this is the last reaction to this zone, right? But one thing you get is after breaking this structure here, after breaking this internal structure here, after breaking this internal structure here, the market actually did that pullback, a pullback that was reasonable enough to go and take some internal liquidity. Right? It took internal liquidity, which now makes this place actually your new zone to make an entry if you were looking for a sell. So this original trade would have been here. All right, but these are cases where refinement is something that you just have to keep doing it over time. Like I said, even me myself, I am still, it's once a while that I still get it. Most of the times I still lose out on trades where I make an analysis and I just come back and I see something like this. I am right here. People who have been following me in my Telegram channel already knows what I'm talking about. So I make an analysis and I just open the trade and like, oh, it missed me out. That's literally because we failed or we have not been able to look into the internal structure the way we are supposed to look into it. We're not precise enough. And that's why I keep saying that refinement is key. If you were even precise enough, you probably would have been here. That is, if you are still afraid and you're waiting for a confirmation, you would have used a candlestick confirmation like this one to make an entry here. All right, with your stop loss. If you're that afraid, your stop loss should be above this one. But it's still something that gets all of us, not just you, me, myself that I'm talking. I'm still struggling with things like this. All right. And then the second one is this one, where the market is coming from the external. And this is why I always encourage you that if the entry point, or if your area, your point of entry, if it is above more than one structure, like if the market is breaking more than one structure to get to you, then you should wait for at least a change of character. That is why I always draw these crazy lines anytime that I'm giving out a signal. I always draw this thing on the board. What this thing means is that there is a structure that is coming. For you to start looking for a sell, you should first of all wait to see that that structure is violated. Internally, we call those internal structure. Guys, don't forget to like, okay? We call those internal structure. So if there is a structure that is coming at you, you want to see that that structure is violated. So there is a higher high here. You expected that this low, which should be your protected low now, should be respected. All right. But then the protected low gets violated, giving you your first sign of that gives you your first sign of hold on. So this now gives you your first sign of a change of character or a violation. So there is a new, when there is a trend, you expect up down, or up down, or down up, or something like that. So now the pullback will be the reaction to this your protected low. So let's say you wanted to take a trade with this protected low, the trade would have been like this. Stop loss would have been above this level. All right. Now, your target obviously would have been to go and break the next structure. That is how a structure is built. All right. A break of structure, pull back, look for a trade, break the next structure, pull back. That is what it means when you are trading with structure, right? But now that this protected low is violated, it is not just being violated at a random point, it is being violated at a point of interest. And how is that a point of interest? I've already pointed out. First of all, that low must have taken care of his own business too, and he must have broken structure to the downside. So that is why you are looking to take trades above the liquidity. Same thing. Repetition, the same thing that you are looking for in an like in the higher time frame is still the same thing that you are doing. That is still what is going to give you a signal that it's time for you to get ready or to get involved in the market. Now the break or the violation of this structure, you wait for the pullback. Where are you looking for that pullback to? When the market is coming down here, because this was a protected low at some point, even though it's an internally or the lowest time frame structure, you expect that the market will react to it. So the market is pulling back from this top, it comes to this protected low, even though it's going to violate it, it reacts to it, it does something like this, a pullback before breaking the structure. That is what we always see, a pullback, then a break of structure. Look, you see it everywhere. It comes here. Look, this is the protected low now, right? Inside, internal is a protected low, right? Okay. The market comes, it reacted to it, but then broke that internal structure. All right, broke the internal structure. After this break of internal structure, chances are the market should now come outside to come and take any internal liquidity that is here. This is the next place of reaction, right? You saw that, all right? Next place of reaction. You now see that the market pull back, gave a complete cycle here. You can see how it pulled back to go above that internal liquidity. All right, that reaction to this protected low, a pullback to go above there, that would have been a first entry if you wanted to look for a sell here. So this would have been your first place to make an entry above that liquidity, stop loss above this one, first trade for this zone. But you don't take trades like that because it is still hanging on a new structure. So if the market is coming from another structural zone, it is not good to take an opposing trade. That is why you want to wait for a better confirmation. And what's that better confirmation? A break of the main structure. Because like I said, this one is internal, right? it is not coming from a structural break and it is held inside of this one. So since the liquidity is taken and you expected like a continuation like that, you expected, sorry, my bad, you expected a buyback from here, right? You expected a buyback from this liquidity. You expected a buyback from here for a continuation of that trend. All right. You expected that, but then it failed and then came back to come and take you out at as a loss. From somewhere around here. You expected that. Now that that is done, that is what is your first indication that the market is about to go down. Now, what is left is a pullback to any reaction to that last liquidity, like this one. Now, this is where it gets confusing, and this is what I'm trying to break down. Why sometimes you have to wait for the last liquidity, or look internally. Why you have to pay attention to what has happened before that break of structure, where it becomes necessary. Because sometimes you're waiting for it to get here, but because this one is also a protected high inside, you get to miss the trade. And this is what refinement will get you. Like from time to time, keep looking at it. From time to time, keep looking at it. And then in a case like this, the reason why you want to look for a change of character is because the market is coming from another place, like entirely. It's coming from outside. So even though it's going to respect this place that you have been waiting for, you should look for a change of character first. In this case, it becomes very, very hard to note, but you can see that there was that sign that the market is about to go down. You go to, like, let's say 15-minute time frame, this would have been like double confirmation. You can see, all right, first indication that I'm about to go down, a pushback, and then a failure. So if you were looking for further confirmation, this would have been a nice one for you to start going. But a case like this, if you are not sure, you just leave the trade and just forget about it because it is noisy. It went above it, so there's a high chance that it might never come back down. All right. So, and then you get to miss out on things like that. Remember, this area is still very, very much active. It has not broken yet. All right. Maybe the market was just looking for a good reason to go up. All right. Maybe the pullback was just too high, so it decided to come back. Or maybe it's a sign that the market is still going to continue going downward. Will I take a trade from here as a sell because of the break of structure here? Probably, like, I could look for a trade here because of the break of structure. But then I would like to say structural formation before I do anything in this zone. So these are the areas where you get to be picky about how you are selecting all these trades. It's a lot of things to consider. It's a lot of values and reasons to do things. But trust me, if you go deeper into it, and like you just pay attention. Sometimes you don't even need to be trading. You just need to be staying and watching your chart and just watch how the story is laid out. It's just like a movie. You watch, 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 watch. Okay, if this happened, this is what you expect next. From your pattern recognition skills, if you are able to get all those patterns and everything in your head, boom, you can start trading and looking for wins. And that is another thing that is going to help you to what is going to help you to not rush into trades. Like yesterday, yeah. You guys remember this trade that I was in yesterday? I took my most profits around here, all right? And we had this prediction up there, and I was showing, was it yesterday or the day before yesterday? Actually, it's the day before yesterday. Let me see if I can, if I can, yes, so let me see on my chart. So this was the trade. This was the trade yesterday for V75. I took that trade there. That was the entry. It was a limit order. That's what I'm working on right now. How I can be able to enter these trades with limit order and not miss out at all. And just completely based on my edge. The reason why I mean by limit or what I mean by limit order is there is a confirmation entry and there is also a limit entry. Now, limit entry comes with precision, like you need to have some level of precision before you use limit entry. Confirmation entries are where you are unsure. But there are some new information that I've been gathering lately that is helping me to detect when I can actually use limit order even without confirmation and decide to just base the entire thing on my edge, and it has worked out very well. And this is one example of them. All right. So I entered here. All right, I entered here and I took profit around there. And I was explaining on the live section that this is the reason that the market was reacting to this low. At that point, the market was around here. So I saw this reaction, all right, reacting above there. And I was like, you know what, let me secure some. And I took like 75%. I took 75% of the trade around there. All right. So now, when it was now giving these signs of rejection, and you guys remember that I was having a limit order up there. I was having one limit order up there. It was yesterday. I was having that limit order up there, but then I removed it. It was in the night. I removed it. I closed my trade. I closed every trade, and I was like, let me just leave it for the day because I had already made what I wanted for that. I've already made what I wanted for that day, and I already taken out some, withdrawals and all that. So I just left that one there, and I woke up to see that the trade actually pan out the exact way that we predicted yesterday. So you guys remember when I was using this to give you an example of why you should have not just like when you are entering a trade, you are entering a trade for now, your problem should not be the trade that you are entering now, but you should also be looking at 2 to 3 moves ahead. You know how people play snooker games, right? If you do all this analysis and all this liquidity thing that I've been talking about, if you put all those things into consideration, you probably would already have been able to predict like 2, 3, 4 moves ahead. And I said that like 2 days ago. If anybody was here, please let me know if I'm lying or if it is true. Because when I keep using, I said that some people might be saying I'm bragging. I'm not even trying to say all these things as like a brag or something. I'm just saying that if you are able to look at these little things and you are able to refine your strategy, very soon you are able to like spot like 2, 3 trades ahead of the trades that you are taking. So yes, day before yesterday, that was when I took this trade, right? I had these things here, and let me actually go to Twitter. I'm not sure if I posted this on Twitter. I'm not really sure. I'm not sure. What would that be? Last trade V75. Let's see. You see? Yep. This was when I took that trade yesterday. It's not opening. I'm not sure why. So you can see the picture on my screen. You can see the video on my screen. What is going on my screen right now? So you can see that this was the trade. This was the beginning. This was the origin of the trade. This was the analysis that I did. This was how the chart was looking at this level. And I think I attached the trading view link to it too. Yep, this was when the market was still very, very at this level. This was when I was securing some profits. All right. And I was saying that if there is a change of character within this region, then we'll go down. You can see that that picture is still there. And this is the picture after. This is what happened. All right. Unfortunately, I was sleeping. If not, I would have taken this trade. The next view or the next view of this market is this one. And someone might be wondering why down here and not here, because I know that this place should be a decisional area. Now, the more you trade, the more you do these things, the more you make mistakes, take losses, wherever it is that you make mistakes on this, the more you start avoiding some unnecessary zones to look for trades from. So, for instance, I know that now that the market have reacted to this one, I don't expect a reaction. Like I expect a reaction to this one, but I don't expect it to be strong anymore. I expect it to just be like a pullback and then a quick. This one will now be like this, a push up, that liquidity grab before it gives you a change of character, before you start looking for a trade. I probably would have already gotten like a 1 to 3 for the first move, taking like my 1 to 3 around there. And then when it push back, any reaction that it does to this one, because when the market is going up, it's going to go up like this, react to this zone because it was able to break structure, push back a little bit before going up, right? That becomes my liquidity for the next trade. So the next trade probably will come like this, below this one, and you will be in another buy. At that point, you would have secured like a 1 to 3. Now you can risk more, all right, on this trade, because why not? You have already secured like a 1 to 2 or 1 to 3 at this point, and that is what you will now be using to take the next trade. That is what I have been doing for the past how many days, and that's the reason why I have not been rushing to drop signals. I've not been rushing to send things today, because during refinement state, right, when you are trying to refine something, or when you are trying to uh, do something that has been like that has been messing your trade up, when you are trying to change up something a little bit, it's not like you are changing strategy, but when you are bringing in new stuff to your strategy, it is hard. Sometimes, if you are not careful, you might, like, get into the position where you don't even know what you are doing anymore. You start giving out rubbish trades and trades that don't make any sense at all. And that's the reason why I've been slow in giving out signals to the Telegram group. So you guys just be patient. I'm not running. I am just cooking. Okay? And anyone. Hmm. Ooh, sorry about that, people. Just needed to take care of something. Ew. Sorry about that. Yeah, yeah. Shake gold. All right. Which pair is this? This is V75 1S index. V75 1S. That's this one. But check gold. What's going on with gold? Gold is just trying to give you information for now. I wouldn't take a trade with first reaction. I would want to see if, let me see, where is it coming from? Okay, let me see on the 5 minute time frame. So I believe this should be okay. So first of all, let's look on like the 1 hour time frame. Ever since gold has been buying, this is the strongest pullback. This is the strongest pullback. This is what I wanted to see. All right. So just with what I have explained before, with what I was just talking about earlier. All right. If you if you look at this formation now, anything that is coming into below this level, anything that is coming into below this level, anything that is coming inside this area should not stop at this one. The reaction should not just stop at this one. It should definitely come and take all this as liquidity. All right, it should come. The target should be this as liquidity. And why is that? Because this one, all this is still contained inside of from here to here. All right, from here to here, everything is still contained inside. So now this becomes the liquidity that you are targeting. All this becomes a distraction. So all this becomes a distraction or decisional area. And yes, that gives reaction. Why? This one gave this reaction here because it was able to push the market to the upside, right? From here to here, it has already given its own reaction to the market. So this is from here to here. You can see that reaction. If you're looking for your 1 to 3, that would have given you your 1 to 3 already. This would have given you a 1 to 3 already. So this new one that is giving you here, this buying idea that is giving you here, in my opinion, is fake. It is just an inducement, or the chances of it being an inducement is very, very high. Take it like that, okay? So for me, I will not be expecting a buy here. And another giveaway to that fact is the fact that you can see your 1 to 3 would have been okay. Yeah, I don't know. My system is a little bit laggy, so just bear with me. I'm just moving at a very, very slow tortoise speed. All right. So after that, you can see that it all was used as liquidity also, right? So it was used as liquidity, and now it is reacting again. So what I expect from here is a pullback into somewhere around here, just a pullback into somewhere around here, and then drop for a continuation. For now, where could that go to? The drop I am expecting should be to this low. Everything within this OB. All right, so that is where I'm expecting the next target should be. Because why? That is the last structural break that you can see within this zone. So take all this one out now so that we can have a clearer chart, because all these were analysis on the 15-minute time frame, and I did not take any of these trades, so there is really no need why I should have some of these drawings there except for learning purposes. All that. So now that I have this, all right, I'm expecting the market to push back into this zone before going up. So what I am expecting now is this pullback up, push down into this zone, and then hope to see a change of character, push back into it, and before we can see a continuation to the upside. This is what I'll be looking to get on gold. So if this is what I'll be looking to get, I'll be looking for any signs of selling pressure. Like I'll be looking for any sign of this type of candle above this level. All right, so if it goes above this level, I'll be waiting for any bearish candle within this zone. And how do I get a bearish candle on the 1 hour? By seeing a change of character on the 15-minute time frame or on the 5-minute time frame. All right, so you can see now that it is pushing up. It's giving all these people the sign that the market is about to buy and is going to buy heavily. Why? Because it is reacting to this low that everybody is paying attention to. What they forget is that this low have already done his reaction. If I wanted to take a trade with respect to this, I probably would have had my limit here because this one is still contained inside, right? I'll have my limit there. You can see that it have reacted and everything that it needs to do, it has done. All right. So this is just a reaction, a pushback into anywhere around here, preferably somewhere around here, maybe some liquidity. Let's see this one. All right. Maybe some liquidity inside of this zone. Okay. So it goes above here, taps into this area, gives me a sign, a formation. Maybe on the 5 minutes, it might give me a change of character. Who knows? It might give me something like this here. That would be the next reasonable trade to look for on gold. You know, a drop. So this formation comes out of this. All right, this formation have to come out of this one, so I'm waiting for it to go above there, give me just like a pushback, give me this formation, and then I look for a sell. Right now you cannot look for a sell here because where will your stop loss be? There's nothing to base your stop loss on, and you cannot really take a buy because it's not really giving you that solid buy formation. You can take a buy now and it might terminate its drop here and start going down. So it's best to wait for the market to do its full pullback and then give you a change of character before you can start looking for a sell. That sell will have a target below this one because now that is the one it should use as liquidity for there to be a clear change of character. That is all I'll be thinking about gold for now. Still looking for sales. A push back into this zone would be nice, but I don't think he's going to do that now. I think he's just going to pull back to halfway and then drop. So that's what I'll be looking for on gold. What of EU? What of EU? Let's see EU. What's EU doing? Let's see where we left off EU. Give me a minute. EU. Nobody. Uh, Sorry. Alright, so EU. Let's see what we have on EU. Do we have any analysis on this pair? I think we should. I mean, it's EU. Alright, so the last time I checked this pair, I had all this. Alright, so I'm looking at it now as you are seeing it. Alright, so I had all this on my chart, and there were two places where I expected a reaction from. Okay, so I expect that at some point this market is going to either break this low and come down here, or give me a change of character somewhere around, and that's why I say confirmation entry. That's meaning only enter with confirmation. Let's see if we got a confirmation. The first confirmation you would have gotten if you were paying attention to only the 15-minute time frame is this one: a break of this structure to the upside. All right, there was that break of structure. There was a pullback, but that's not a good pullback for me to make an entry. EG. Okay, sorry. My bad. My bad. I'm seeing EU as initial first three. EUR USD. Sorry, my bad. USD. I did not even look at that. I've really taken some time from. Alright. I bet they'll be looking the same. So let me see. The last time I opened EU, the market should probably be around this zone. It will probably be around this zone, and I was waiting for this break of structure to take a sell. You can see the projection was already there. So I was waiting at this point, and I said that if there is a break of God, why this thing is lagging, I don't know. I'm not even doing a lot right now, but it's lagging heavily. So, anyways, let's see. So I was waiting for there to be a change of character. You can see these drawings that I have. Yes, that after there is a change of character, I will look for a pullback and this entry. There was no change of character, so there was no trade. I did not take the trade. I was not even planning to take the trade, but that must be an instruction for whoever asked me for an analysis. All right. Now, what you get is the market is still very much in an uptrend, all right? And looking at this, I can start doing my predictions of where I expect the market to go back into. First rule of thumb, structural break. First structural break that I have is here. So at some point, I know that the market should react from here. When the market gets back, I know that it should react from here, all right? Second structural break will be this one from here to here, areas where I expect a pull back into. That's the second one. Now, this will be used as liquidity. Right. This will be used as liquidity for this. All right, and all this could be used as liquidity. All this could be used as liquidity for the lower one. All right, so all this one now can go because they are nothing. It gives me nothing. It didn't give me any sign. So there are two places that are contained internally. All right, so now you might see the market reacting to clearing this liquidity, which is nice, but I don't think, all I think about that is just going to be a reaction, nothing tangible. It is definitely going to want to pull back into one of these two areas before going back up. All right, so if it's going to use this as liquidity, then it's going to the final zone. Having that in mind, after going all the way up, we can see that it did again a clear of liquidity above here. All right, so it took all that liquidity, and there was a break of structure. Took all that liquidity, and then a change of character, whatever you want to call it. So an internal change of character happened here, meaning that this last reaction to this zone becomes our target for when the market is coming back. So anything from here to here becomes a reasonable entry point. And let me make sure I hold everything inside. Now, this particular zone is very wide. So often when I see a wide zone like that, I'll have my trade there. I'll have my sign there, but then I'll have this sign above to signify confirmation entry. All right, confirmation entry in here. All right. So I'm waiting for the market to get in here. If once it taps into this zone, I'll have confirmation entry. Then for the final one, since I know that the area should definitely react, I can have a second box inside there. This becomes a place where I can set a limit order. All right, because there I'm using like order block, and if I go down to like the 5 minute time frame, you see what I'm talking about and why it is very relevant. All right, so you can see now that the first reaction to this high will be seen as this one actually. So and there is an order block inside there. So I don't want to miss this trade either way, but I will not enter a trade all from here and risking that large. I will not be risking that large stop loss. Instead, I will have two positions or two places where I look to take the trade from. Inside here is confirmation entry. If it doesn't give me any change of character, I am not entering. But if it is going to the premium level and I still expect that this zone is going to hold, then I am going to make a limit order somewhere around, you know, there. Stop loss above there, a little bit above the zone. And then target will be, the first target will be this low for a 1 to 3. And above all, my overall target, I take some profit here, but my overall target will be all the way down here. Because like it or not, even though the market wants to change structure and start going down, it should still give a reaction to this low anyways. And during that reaction, I should definitely would have been out of the trade with about 70 to 75% of my trade. Now, this is only valid if this market pulls back to this before. So if this market pulls back to this before reaching this zone, if it gets to this zone first, let's say it gets back down to this zone first and it gives you like a change of character, yeah, at this low, then this low becomes, sorry, this high becomes weak, and the target for this low becomes above this one. So somewhere, if it gets to this low before coming back to this up, then a trade like this becomes possible. Okay, because now this is the trend. The break of structure is going to the upside. You are looking for continuation to the upside. So if the market comes back down to this area before pulling back into this zone, then there is no point, unless if it takes out this low first. It uses this low as liquidity. Let's say it comes down to this low and then it just violate the low, then it makes this one valid again. So these are the criteria for any of these two to happen. So and this is the 5 minute time frame. Going back to the 15 minute time frame, you can see that this is what we are still looking for. What is reacting to right now is just internal liquidity. And yes, it is the 50%. So it can have every right to push the market and like keep going up. The reason why you don't want to take a trade at an area like this is, come on, if you take a trade now here, where is your stop loss going to be at? Is it going to be all the way at this low? And how do you even know that it's going to come from here? What's the criteria for that? What's the reason why you want to take a trade at the middle here? Unless it gives you like a change of character, like let's say after this one there's a pullback and then there's a break above that structure, then it could give you a reason to, want to take a trade. But for now, there is really no reason. It's just a reaction to, liquidity grab or whatever that you want to call it. Anything that you want to use to understand this is fine. But there is no reason to take a trade just because you are seeing a reaction to a zone. If I want to take a trade, there should be a reason behind it. All right. And there's no reason here. So the things that me I see that I'll be looking to have is either from here to here or here to here. These are the two trades that I can, envision or project for now. All right, on EU. Welcome, Tony. So ZAR USD moving nicely, going up. So since Forex is not giving anything yet, let me be looking at my synthetic pairs because at least I know one will definitely be a nice thing. All right. So if you have any questions, please feel free to ask. And let's say there's something that you want to clarify about all these words that I'm trying not to use, but I have to use at some point. When I'm doing all these explanations or when I'm explaining some of these concepts and all that, if there is something that is still confusing you, because if you notice, I'm trying my best not to use those big words, fair value gap, liquidity, other blah blah blah. I try to relate my own trading with something that I can understand, something that I can relate with. So if you have any questions, yeah, if you have any questions that you want to clarify, anything that you would like to clarify, just let me know. I will explain it better for you. Okay? And yes, this is very necessary. I have to be showing my face from time to time because TikTok feels like anyone who does not show his face is a scammer or is scamming people. And I don't blame them. A lot of us Africans, let me trade with the trade. Na scam with a scam. UJ, what about UJ? What about UJ? UJ, UJ. Let me see if I did any analysis on UJ. USD JPY. USD JPY. This is USD card. Okay, I think I have USD JPY too. Okay, so this is USD JPY, and again, from what we can tell, the zones are being respected, some are getting violated. I think this should happen because of the news, and if you were here, you could have still caught this trade. You guys remember that we always say that confirmation entries. There are various forms of confirmation entry. The candlestick could be a confirmation entry for you. Like if all right. A candlestick could be a confirmation entry for you. A place or a zone where it is trading from what level of liquidity, whatever it is that you could use as confirmation. It could be the level of liquidity sitting above all that. You can see how all these areas were respected all before. All right. You can see how all these areas were respected all before. Now we talked about on that USD JPY day. The reason why I had this box here, was that I already said that every zone based on order flow, if you can see all this, every low here has been respected. When you see a formation like this happening, when you see something like this happening, all right, when you see something like this happening in the market, you could also consider them as liquidity buildup, all right, trend line liquidity, whatever you want to call it, from different strategies here. You could call it trend line liquidity, wherever. Now, when it's respect for a while, so you can see one, two, three, internal one. That's why I had that box here before. I'm not deleting it for no reason. So there's this internal box that was respected here, gave a change of character, and that is why this one was here, correct? Okay, don't say anything too much. All right, so all these things that were here, they had a reason. It was following a particular pattern, and eventually that pattern gave way when, um, after respecting this low here, after expecting this low here, it came back to come and take like the ultimate liquidity, or what you would call the one at the most. um, premium zone, all right, whatever you want to call it. It did that. And when the market was coming back down to this level, I said it was going to take this one. There is a high chance that it might do the same thing. You guys see how it have already respected this zone, yeah? It have already respected this zone, but then it came back down to respect the lower one here. There is a high chance that it might do that to this one, because if you look at it, there's still a space there that was not mitigated, right? So it could do that to this zone. That's what I said. That's the reason why there was this drawing that you saw here. That was the last time that we talked about USD JPY. I remember saying that. You can go to the YouTube live stream history. The last live stream history that we did, if you look through it, you see when we talked about this. I could do this. Now, the second option was, since there is a serious build-up of trend line liquidity here, you could come and take out this trend line liquidity and then decide to go upwards, all right? And decide to go upwards. With that, we had two formations here, all right? Now, it took this as liquidity, everything that was contained inside from the beginning of the trend line to the last one. It took them, as you can see, it cleared everything here as liquidity, and then it has officially gone up to give you a break of structure as anticipated. All right, there's a break of structure or a higher time frame change of character, what you might call it like that. CH for the higher time frame. So took care of business, change character, reacting right now. So now our first zone will be from here to here. You expect to see a push down into anything from here to here. All right, so this is the change of character that we are looking for. Now you are looking for a pullback. That pullback, I expect it to come below the liquidity posted inside of this zone. All right, so liquidity above there. So that when there is a pullback, I expect to see like a buy within this area. Now that buy is still going to come with a change of character because it's in a very big zone. I can reduce it down to other block because the zone is just too big. Or I can go down to like the 5 minute time frame to see if there is somewhere I can target. Now, you guys remember that if you are trading with respect to this one, is because this is the final pullback before the break of structure. But if you want to trade with respect of this change of character here, this change of character, if you want to trade with respect to this change of character, this pullback has to be studied. This one, or this one has to be part of it because this is the last pullback to this zone before the break of this structure. And if you want to take it a step further, you might look for the last pullback to this one, but all that is not necessary since you are looking for a trade on the higher time frame. All right. Since you are looking for a trade on the higher time frame, you just wait for it to get back into that final one. It's either that or it reacts to this liquidity and gives you a sign that it wants to buy back up. It's either it reacts to this zone like this, and then give you like a strong bullish candle, pull back, and then a continuation, and you enter with that, or it gives you a change of character in this area. Those are the two places where I see there will be a trade from. Now, as for this one, if I go back and I take it to 30-minute time frame, as for this one, it's not hitting anything, so maybe it's just one drawing that I pulled away. The next very big one will be here. The next possible area I expect a reaction from will be anything from this low because that's the last structural pullback. So I'll only look for trades from structural pullbacks because they hold the most volume. For a market to be able to build up a structure and use that structure to do a break of structure, it shows you the level of volume that came into that market then at that point. All right. So now this one, just like I said, that if you are trading here, you are trading based on liquidity. This is what you see anytime the market is rushing for liquidity. It often just come, sweep it, and run off. So if you want to take a trade with respect to this one, you set a limit with respect to that one. Put your stop loss below this formation. So if you want to risk the two of them, you don't care whether anyone is going to work. You can take your first trade here, stop loss below that low, look for a buy above to keep going to the upside. Right. So if I wanted to take a trade on USD JPY, that is what I'll be looking for. That's the first one. In terms of reaction or where I expect reaction to come from, first of all, I will ask myself, where is this market coming from? it is now coming from external, right? It is coming from external, which means that if this is the last zone has to be taken as liquidity, or the first reaction needs to be taken as liquidity, which means that the market is definitely going above this point. All right, and that should tell you your target. Okay, if it pulls back before, so if the market gets here, there is a possibility also for a reaction. It might be a reaction that will give you a 1 to 3 or a 1 to 5, but definitely you expect a reaction, so you could project for a 1 to 3 around here. But then if you want to target something reasonable, you target the internal liquidity. And this is what I mean when I said that the market moves from zone to zone, from point to point, based on what it is going after, based on what it is looking for. It is always running after one liquidity or the other. I've already told you the story of the market being the driver, and the driver is always looking for passengers. So if you connect the dots now, you see the reason why I keep using all those little real life examples to make my presentations to you guys. All those things will help you to understand why you are looking for something, where you are looking for it at, and all that. So now, if I take a trade from here, if I wait for a change of character, fine. If I take a trade based on liquidity, or if I'm expecting something like this, I could take a trade here. Stop loss will go above or below the last liquidity candle. All right. Or I could take a second trade here with respect to that last liquidity. Stop loss goes below here. So there are two places where you could look for a trade from here, either this or this. All right, you could use all that as one, take just one trade, but that is just definitely significantly going to reduce your risk to reward, and it might not be good for your edge. All right, if you keep doing all that, so sometimes you might just stick to your edge and keep risking your 1%, and you don't care whether you lose one trade or the other. So far, one of them plays out. So, for example, if I take a loss on this one, a win on this one is already good enough for me to get like a 1 to 5 or a 1 to 3. And a 1 to 3 is already good enough for me to recover what I have lost plus one error, which is still good. At the end of the day, if you do that 9 times, you have made 10 R. If you are risking 1% of $100,000, that's $10,000 just by losing one, winning one, losing one, winning. No, sorry, losing two, winning one, losing two, winning one. You do it 10 times, you still made 10 R. You lose two trade, you win one. Lose two trade, you win one. Just for a 1 to 3. In 10 trades, you already made 10 R. With that, you don't really need to be risking too much of your account. It's just time and scaling up. How do you get the $10,000? Well, if you are able to be making 10 R in 10 trades, and you can tell yourself for sure that you make 10 R in 10 trades, then you can now level up and just go and get a funded account. Simple. You make some money from your little $100, you take your time, you be risking $10, you make $100, you go for $10,000 accounts for $100, which is what I'm doing, or I'm almost about to start doing again, because I've actually given up on funded accounts for a long time. I told you guys the story already. I have my certificates behind me, so it's not like I passed. I made money from funded account, but them taking the account down made me to tell myself that, nah, if I have to be a trader that I want to be, I'll need to first of all master my strategy before I hit them back, and it's about time. So very soon I'm going to be taking some exercises and buying some challenges live, and I'll be trading those accounts and proving to you that this idea of losing two, winning one, if you can just get all those and you just be following the market, is already enough for you to win a funded account, make some profits from there, buy another funded account. This makes it very sound easy, but it's not really that easy. A lot of things are going to be involved. You using your money to buy the funded account, but hey, if you put that money in your own account, you probably could still lose it anyway. So it's still the same thing. You're just risking it for a better opportunity. Because if I'm able to buy a 25K funded account and I make 10 R, that's 2,500. From there, I can use 400 to buy a 100K account and make 10 R again. 10 R, it's 10K. Scaling up. Do that 10 times, you have your own 10K account. Too easy. But now then you go start to dey cry, you go lose. So what else? This is what I think on USD JPY. If you are looking for a sell here, I don't really condone that. If you are looking for a sell, what you should look for is this: push, break, boom, boom. All right, and it has not done that yet. And for this to be a break or a change of character, it first of all had to go below this one, right? And it has not done that yet. 15 minutes to your highest time frame should, I mean, all the time frames are good, but you should not be looking, you should not be on anything below 1 minute. 1 minute is a very good trading 1 minute is a very good trading time frame, but it comes with a lot of selection. You have to be very, very, very precise with your selection in order to use 1 minute. Just see it as a pool of opportunities where some opportunities might be misinterpreted. All right. So on the 1 minute, you could take a lot of trades in just 10 minutes. But then, in a lot of trades, how perfect is your selection ability? So, just like you said in your question, what time frame is best for beginner trader? You just confirm to yourself that you are a beginner, which means you don't have the necessary experience to be on a lower time frame where you will have to select from a pool of opportunities. In the forex market, there is no losing trade. It is only a losing trade with respect to you, because the same time that you are selling, another person using another strategy is buying, which means it's a winning trade, but it was a losing trade for you. Now, your ability to select from which trades to take makes you, or it can make or break you. And as a beginner, you don't have that level of experience to select from the many opportunities. So the one thing that the beginner will always do is they will just be taking all the they will just be taking all the trades that they see. And if you are on the 1 minute time frame, so far a pattern is registered in your head. So far you already have one pattern registered in your head. You are going to be seeing it all over. All right. So for example, this drawing that I'm always doing anywhere that I'm about to take a trade, this is my entry pattern. This is my entry criteria. All right. This thing that you are seeing, this is my entry criteria. It is also my structure criteria. That is what guides me with my structure. That is also what guides me with my entry. That is also what guides me with my um, exit. All right. Because I use it to exit the trade. The moment I see it happen on the opposite of where I am going to, I know that this is a sign for the market that the market is about to return. So if I am in a trade and it is selling and I'm smiling, this is a sign for me to get the fuck out. All right, just leave the trade and just run, because at this point, even though the market is going to continue in my favor, let's say I was in a trade for 1 to 7, and this thing happens. Let's say I'm looking for a sell, I'm going in a sell, and then I see this formation somewhere, or let's say you are going in a buy here. You can see that that formation happened before that buy happened. You can see that's the formation there. I see a buy here, and then I'm going in this direction. Then I now see the same formation against me. Instantly, that should tell you that even though you are looking for a buy that should take you to Jericho, exit some position at that point. All right, or you are taking a sell and you see that formation against you, that is telling me to fuck up. Now imagine if I was using small mind. Thank you so much. You are the first gifter officially on this new account. My former account with 6K people was fortunately taken down, and that is why you can see that we are little. We used to have like 250 to 400 people watching at a time, so this is not really a very small family. You are just finding it for the first time because our main account has been taken down. So thank you so much for being my first gifter. Small mind. For that, I'll give you a follow real quick. So thank you so much for making the live lively. I believe after now, TikTok is just going to start promoting it to other people because they see that some people are gifting and they are making money. So again, that is one thing that I was talking about when it comes to gifting and uh, your first. Oh, sorry, Tony. Sorry, I have not seen personally. I have not seen a gift on the channel. Maybe I missed it. The phone is always on. Now I'm using two phone, so I can see what is happening. But the phone now, the second phone is on the tripod, so now I can read the comment at the same time. So if I did not acknowledge you at first, sorry. But anyways,
Thank you so much for gifting, and I'm happy that you are enjoying what you are getting. All right. So thank you. So now, what I'm saying, I was telling you how this pattern could be an issue, and I'm getting back to your question. Don't I'm not deviating from your question. I know what I'm doing. I'm trying to explain to make you understand what exactly it means. All right. So now, if let's imagine that this pattern is now registered in your head. If you are on the 1 minute time frame, and let me use this as an example. Let's say this is 15-minute time frame here, and let me take a sample space. Let me take a sample space of here. So from here to here on the 15-minute time frame. Now going by that pattern that I just showed you on the 15-minute time on the that pattern that I just drew. If I want to go by this time frame, I'm only seeing it once. So here there is a pullback, a break of structure, a break below structure, and then a pullback. So this would have been our entry for this trade. That is one. Or you can do all of them as one, and then you get uh, a pullback above this one here. So you draw a box around here and call all that a break of structure. So on the 15-minute time frame, you would have gotten into two trades. So let me move this aside to see that this thing is what I'm talking about. This is the structure that I draw for you, right? On the gold part. Oh, sorry, it's missing one leg. First of all, the market is coming from this direction. So it's coming like this. Right? So this is the structure that I drew for you guys, right? On the other side, this is the structure. So you can see it now that the market is coming from down. It has a pullback, a break of structure, and it's going down. You can see the same thing happening. You can call all this one as the same one big fellow. All right, so take this one here. From here to here, all right, a break of structure. So you expect a pullback to above liquidity, right? That is the pullback there to this liquidity, and then you expect a drop for continuation. You can see that on this 15-minute time frame, if you really want to pay attention to it, we have one, which is the main one. There you draw your box above that liquidity, expecting the market to pull back into this area. In this area, you need confirmation, right? So you go down to, let's say, the 5 minute, and then you see, or even on the 15-minute time frame, you're just looking at it on the 15-minute time frame. You wait for a pullback. This is the pullback. Yeah, your first entry would have been this one. So here above that liquidity there, you have an entry. All right. So 1 to 3, because it's the first entry, it might be the one that will go for a break of structure. You look for a 1 to 3. Your 1 to 3 is not met, but it came close, right? Let's even say you were, a little bit more higher, would have gotten yourself a 1 to 3. But let's just say you set that trade to break even. Now you call this one the perfect break of structure. This one is just an internal shape, right? You call this one now a perfect break of structure. So you are looking for a trade here. The second trade you would have taken would be this one that I gave you, because that's the one that came above liquidity, right? So your stop loss is above the zone. Let's say above the main zone. Your stop loss is right there. This would have given you like a 1 to 3. Let's say, for the sake of this video, so that I will have some losing trades. Yeah. Let's say that this one took you out at break even. It is not a losing trade, so it's deleted. But this one, you are able to get like a 1 to 3 on this trade. Or let's say that at this point, since it is coming from the outside, you're looking for a change of character. So you did not enter the trade here. You are waiting for the opportunity for when the market is going to come back down. But let's just say that you cash one trade out of three. All right. But you can see now that on the 15-minute time frame, regardless of how we are paying attention to our pattern, we have only managed to see three or four. Okay, sorry, four. You can see that same structure formed there. And you can see what I said about it also gives you a sign to get out of the trade. Let's say you go yourself inside this trade. You are in this trade here. You are going down. I don't know. Let's say with respect to something that happened in the past, you got yourself in a trade here. You are looking for a sell to forevermore. All right. You have no target. But the moment you see this structural change, you can see this structural formation, the same thing happening against you. This is your sign to get out, because originally, if you were supposed to be looking for a buy at this region, this is what you would have looked for, to look for a buy. So you probably would have gotten in a buy here. That is a sign for you to get out. Now you have this your structure, you have this your pattern that you have in your head. The pattern is registered in your head. All right. So now you are anytime you see this pattern, you are eager to enter a trade. The problem that we now have is you don't know where to take the trade, or where to exit, or where to leave the trade. Imagine now that you are in a 1 minute time frame, a very low time frame. All right, you are going to be seeing that same pattern like 100 times in this same sample space that I just showed you guys now. All right, in this same sample space, just let's just say from this leg to this leg, let's see how many times that pattern appears. All right. So let me start from here, and I'm just choosing at random now, right? Let's start from here. First of all, First of all, we say that any leg that breaks structure is strong, right? So one, two, all right, it broke structure. He was able to take liquidity. So this one, let me quickly delete this guy. All right, I'm really zoomed in now so that you see what I'm talking about. So now, first trade, automatically you have a box around here. On the 1 minute time frame, you have a box around here. Same thing, same thing. You take a trade, first trade, yeah, boom, 1 to 3, let's assume 1 to 3, boom, 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 somewhere around here, 1 to 3 is done. All right. But immediately that happened, you're already seeing another one. You're already saying, look, this is another one inside here. In just 5 minutes or 20 minutes, you're already seeing like 20 trades. It gets you confused. Like, which one do you select? And in so many ways, you are going to be presented with so many reasons why you should be entering a trade. That is why I only use the 1 minute time frame to exercise and to just experiment if my refinement is working, if I am really getting the concept of my pattern. All right, so that's why you see me flipping on synthetic indices, because I know there is no fundamental that I should be worried about on synthetic indices. So on the lower time frame, I can play around on synthetic indices, but you don't try that with Forex, because Forex you also have to consider fundamentals. All right, you also have to consider fundamentals. You also have to consider sentimental. What are people thinking? In synthetic, all those things are not a problem. They don't they don't matter. All right, because they are not involved. Remember, synthetic indices is a model based on algorithm that was derived from Forex. All right, the movement of Forex is what brought about the idea of synthetic pairs. Right, so they are a model, or it's an algorithm modeled with the way that Forex acts. All right, but since there are no news to affect it, you can easily use your technical analysis and be getting something very very precise. If you can be very very well precise with this thing, you can get it at every point. It is happening in many 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 points. The problem now is you easily get stuck. All right, you easily get stuck when you are doing it. If you are not careful, it gives you that sign. You can see this is one losing trade. This one did not pierce in. The trade for this one was a successful one, but the problem is which one should you select if you are stuck on the 1 minute time frame. You might get yourself some very very reasonable big big trades. All right, you can get yourself some very very reasonable big big trades, but the problem is you don't have the ability to select that much. You don't have the experience to select that much yet. So it is best to avoid the lower time frame. You might just be watching out for that pattern on the 5 minute time frame. That would have really reduced the like the number of times that you see those same pattern, because it takes a lot of time. That thing that we're just doing right now, this is where we are. All that thing that you saw that we're doing that was many, this is where we are. All that plenty analysis, that all those plenty lines that I was drawing, this is it. On the 5 minute now, it's now looking very very small. On the 5 minutes, you can now see that you are even stuck within a range, and you are already shooting for the moon. All right, you are stuck all within this range. Something that could be used as liquidity for another one. Meanwhile, on these 5 minutes, you probably would have just been seeing one sign so far. So you wait for your change of structure. This becomes your entry. All right. So you're looking for a trade here. It reacted to your POI. Okay. So where's that POI? The POI is from here to here, right? This is the POI from here to here. The market tapped into your POI. Now you are looking for a change of this structure. You got yourself a change of structure or a change of character, boom, internally. So even if the market is going to violate you, now you know that if the market pull back, you expect a buy from here. All right, a buy from here. Stop loss if you have the boss. If based on experience, depending on what your experience are, if you have a good experience, you can enter with the first blue candle that you can see, or you can make a direct entry. All right. Now, with experience, you could keep your stop loss here because there should not be a dip down below this one anymore. But if you want to be safe, you can keep your stop loss at below this one and look for your 1 to 3. You can just be looking for just this one pattern. If you don't see the pattern, you avoid the trade. Just keep looking for one it shouldn't be my pattern. It must not be my own pattern. Look, pay attention to your chart. Take some time out. Just be looking at the chart. What do you see occurring so many times? If you see it occurring so many times, it could become your pattern. It depends on how you can spot it. So the moment you spot it, your mind is already telling you. So for me, if I open my chart and let's say I see a consolidating market to this down and I see that it has gone below this liquidity and I am seeing a break of this internal structure, I'm telling myself I should be expecting a trade from this low. And this one, if I'm not convinced with this one, this second pullback that has a break of structure internally here is telling me that we're getting. If that is not convincing enough, this one finally drew the curtain. You can see break, come back. This is like this the third opportunity that you have. Combine that with the candlestick confirmation, and you have yourself a very good trade all the way from up here. Instead of looking for where the market is ending, because that's what we keep doing. Most of us, it's not like we don't know how to trade, but we just know how to trade too much. We have learned too many strategy. We have learned too many stories, like SMC, trend line, or what is this my own called again? Sef? Price action, support and resistance. We have just learned too much that it's contradicting everything that we know. So instead of learning something new, most of us we just need to review some of the things that we have learned, make it a little bit simple. You understand? One pattern, if it doesn't form, it doesn't form. If it forms, you just know that your edge is going to work. If you take 5 trades and you are able to get two, you are smiling. You are not saying that you know how to trade too much. All you are just praying for is that God, if na luck this forex be, at least make my luck shine 2 times in 5 trades, or 2 times in 4 trades, so that my account will remain how it dey. Shey you understand? Your account will just dey where it dey first. And with just two wins in 3 trades, sorry, one win in 3 trades, you are already good. That's just what I said. One win, 3 trades. All right, you lose two, you win three back. Remember, when you are winning three back, your original risk is not involved in that one, right? Because when you are looking for 1 to ratio 3x, if you risk 100, your 100 is still in your account. That's forex for you. That's the difference between forex and gambling that many people don't do. When you are risking money in gambling, I don't know how they calculate that thing, but if you have a 1 to ratio 5 odd, let's say you have 5 odds, you play your $100 on 5 odds. First of all, they take your $100, they take it, they hold it. All right, and then when your trade win, you get $500. In forex, if they take your $100, you are getting 600. See the difference? Because in forex there is no taking, it is floating profit. And if you are losing the $100 that you want to lose, that you prepared to lose. So I don't know how that mathematics works in gambling and forex, but I see that difference there. That if anytime I'm betting with 50,000 naira in gambling, is gone. Like 50,000 is gone, and if it's too odd, I'm getting 100,000 back. If you have too odd in forex, if they take your 100, you are getting 300 back. Correct me if I'm wrong. So maybe in Amino Sabian, but can you please analyze any pair? What pair? What pair? I've been analyzing pairs since. What pair do you want to analyze? All right, I think I have a pair that I was looking into. Right now, I am waiting for this one to get into the zone so that it gives me a sign and then I get involved in it. This is V75 1X. Also, I have the V75 that I analyzed yesterday. Let's take a look at it. Let's take a look at this. So this is what we were doing yesterday. I was targeting this internal liquidity, but for some reason, this one decided to go or keep going down, or maybe it's not yet ready. Currency. I've already done like three analysis for you on currency, bro. I don't trade currency that much, but I've already done like two or three for you. I did Euro USD and USD JPY for you. What else are you asking for, brother? I'm not really a big fan of those currency pairs. I only do analysis on them because people ask. So which one are you looking to do? Since you are just chilling and we're just talking, we're just blabbing, we're just yapping. To see if there is a good reason to take a trade here, but I'm not finding it yet. It isn't. No, this one is already tapped. What currency pair? Me, I am not a fan of currency pairs. So you have to suggest a currency pair, then I look into it. Say G, you know vex, I beg me vex. Why I go vex? I know the vex, so I know sabi vex. Ask everybody wey know me. I know sabi vex, so you say I born me, I never vex before. I dey come. I wan see whether I fit get one trade for here before I go that GU for you. So there's this that was reacted there, but decided to use the final one to and this and see what happened here. Sorry, I'm coming. I'm coming. Give me a minute here. I was looking at this trade for like 2 days now, and I think it is trying to disrespect me, which I don't like. Savage King, I'll also do that for you. Just give me a minute. Let me finish with this. Same strategy, same everywhere. Same strategy, price action, same everywhere. Okay. First of all, let me see how all this thing is coming. Same strategy, I follow what the market is doing and I react to it. So give me a second to let me finish with this. Maybe there's something that I didn't check. I know that this particular pair has been ranging and I've been looking for an opportunity to get involved in its story for long, but every time it gives me an opportunity, I always miss out on it. I always come when my forecast or my analysis have played out or when it's halfway. That's the one thing that I don't like about volatility indices. The chart does not have alerts, so I get to miss a lot of trades anytime I'm taking volatility trades. I get to miss a lot of trades. Like these two trades now, I did the analysis for this one, and I also projected for this one, but I never got in. So now I wanted it to get to this one, and it never came there. So I don't know why this particular page is just playing around with me. It's playing around with me. It's playing around with me. But that is an uptrend. So let's see. Okay, I can get this. Then I'll look for a buy. But for now, I'll still be looking for this. Regardless, the main trade should come from this 30-minute time frame, by the way. The main trade is here. I would like to see a break of the structure first. At that point, all this becomes my entry zone. Yeah, and here. Sharp. Right, so push, 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 and take all this one out because it's noisy now. By the way, if you don't know, this is how I do my top-down analysis and all that. So reason after reason, reason after reason, there is a break of this structure. I'll expect a pullback to this liquidity, and then I'll look for a sell for continuation on this pair. Okay, that's it because I know a lot of people are not interested in volatility. Let's say GU, that was the first request. GU, and I believe we should have something on GU. Now, in case you guys don't know, EU and GU, this was the last trade that we took on EU, a very successful trade at that. EU and GU Like I said, are correlating pairs, and you can see that we already have our forecast in places for GU. All these things that you are seeing, these are things that we did before. So, like I said, if it comes here and it gives me a change of character, boom, 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 you go. One thing for sure is, if since this one is coming from the last, the final area, if I was actively trading, this would have been a limit order. So you can now see that even with the whole news and the whole news events that happened, and with the limit order, you still got yourself a 1 to 1. All right, 1 to 1. Why is that possible? Because this is the structural formation. This area also is a structural formation. You can see that there was a reaction to it. So if you're looking for, you can see all the places where I marked out. This is the first time I'm opening this trade. I believe the time that I did all this drawing, this market was still here, because this is the start of the place. And that day, someone asked me for this analysis, and I said, for now, it is a buy until this low is validated. This low should be respected first. All right, this low was respected, gave you like a 1 to 5, somewhere around there, and then it finally did a break of structure. After that break of structure, like I just drew here, I expected a pullback. All right, so if this is what we were saying that day, I said if this move was able, this is the reason why you see this drawing here. If this move that was coming down is able to go below this one, then you expect a pullback to liquidity. That's why there is this box there, this one. All right, then you expect a pullback to this liquidity. If not, it is still in an uptrend, and you can see it went up for a 1 to 5. So if you took a buy there that day, nice one. Secondly, the target for that will be, if you took a sell here based on that break of structure, the target will be this one, because this place should definitely react, right? So if you had this drawing and you took a buy with respect to what we said there, you know that you were not targeting London. Possibly I'll be targeting a 1 to 5, and that 1 to 5 will be terminating here, somewhere around there. But you can see that it gave you like a 1 to 3, very safe and good enough for you to get out of the trade, or at least set it to break even. That's the second one. Finally, this is the third one, and this one could easily be used as liquidity. So hold on, you guys see how it is reacting to it now. I don't believe it's going to react and keep going. I think it is still going to take this one out as liquidity. Why? Because everything that happened here is internal with respect to this move. All right, from here to here, everything here is contained inside. So I see this as possible liquidity. uh, I see this one as possible liquidity or final liquidity for this zone. So you could just do a week down now to take out this one before going up. All right. But definitely you should see yourself a reaction to this area. And I think this one should go for like another 1 to 3, somewhere around here before going down. And you can see how all these things are aligned with support and resistance too. So if you took a trade here, definitely, let's say a support and resistance trader was looking for a break and retest, of the solid front. You can see this test, test, test around this area. So someone like Raja Bank would have drawn a line here. You can see break bounce, and you can see how our own target is precisely around those zones. This one too, if you were doing it based on support and resistance or break and retest, you can see this one level, second level, third level. You can draw your support and resistance around there. If you're a support and resistance trader, and most of you will now be surprised that is that what you are doing. But again, you can use that as your target and target this one. All right. So one trading strategy, you are not fighting with anybody. You are just picking from anywhere the market is going. Nothing concern you. Concern say, okay, the market won't go this 100 direction or this. At in the future, since if this one is broken, if this low is broken now, let's say this low is violated finally, then this becomes the new protected high. You see all those places you see my box around, those are strong or protected lows or protected high. That is what I see them as. Strong low, protected low. So I expect a reaction from them. But all that is based on what structure have they broken. So if it is coming, let's say this thing was coming back to that area now, I would have looked for a sell. If it tapped into this area and it gives me a change of character, I'll look for a sell. But since it is coming down now, you can see all the places that it's being respected, and it can keep going and keep going and keep going, because at the moment it tapped into, the moment it goes below this one now, the moment the market goes below this one, you start considering everything that is inside there. That is when this will now come into view. You can now say, okay, everything from here to year is a liquidity and a POI. Most of you select POIs without having a criteria for your selection. It becomes a new POI. At every of this level, the market can decide to continue going till infinity. So this is just an analysis based on facts that you have on the ground. And that's the reason why you see me annotating my chart like this and dropping all my, like if you are using pattern recognition, yeah, if you are using pattern recognition, you should already have a forecast for the future, not just the trade that you are taking now. The trade that you are taking now, you should have already had that vision from your formal analysis before your last trade. That's why you see all these things always on my chart. And thank God I'm not even drawing them now. Some of them have been here for weeks. I can take this chart back in time and you see that there are some drawings that were already on the chart. Sometimes I come to the chart, I just delete everything and do them again just to get myself back in line with the story. And very quickly, if you are trading like this, you get yourself to see what is going to happen a few minutes before it happen, and that way you are not shocked. Like for instance, let's say I'm taking a buy from here, you can see this arrow here. This arrow here is telling me that I also expect that it could break, and if it break, there is a retest and then a continuation. Which means if I take a loss here, I wouldn't. It's not going to mess with my psychology because I already predicted that it is possible. All right, you know that it is possible, you know that this could break and then continue going. So you are taking this risk with respect to all the information that you have here. So if that one breaks, no problem. If it breaks, no problem. You just take the next trade. One losing trade is a signal or an indication for the next trade. It's a sign that okay, you are in the wrong, so you should align yourself with the right. In the market, you are never right. The market is always right. You are just a follower, a passenger, and not the driver. So I hope that is clear. For now, I believe this is going to keep pushing to this level before any other, you know, formation. And if you ask me where I think it will definitely go to, it's above any internal liquidity here. So I'll be targeting somewhere around here, just like this one went for some liquidity. If you go to 5 minute time from now, you see it clearer. You can see that this one went for some internal liquidity there, what you call support and resistance or whatever. So this one now I expect it to go above some liquidity here. Give me a sign like this type of candle, and then you follow. All right. So if I was to be taking a trade on GU, this is what I will be doing. So if you ask me what to do next, I would just say if you are not yet in this trade, wait for it to do some kind of pullback and then enter. Usually, I don't like to take retracement trades. I like to take continuation trades. Why? Because retracement trades are very, very consolidative. So when you take a buy like this and it's a retracement trade, know that this is what you are expecting. Boom, 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 boom. So it's going to be moving around for a while. It might take till next tomorrow before you see that big, quick drop. Me, I like to catch those quick drop and avoid the retracement of the consolidative pullback. All right, so if you don't know the difference, you need to still pay attention to your chart and learn the difference. There is a consolidative pullback. Your trade is still going to be successful 1 to 3, 1 to 5, but the difference is you cannot rush it, or you should not be expecting it to happen in 15 minutes the way this one could happen. You can see that how quick this one happened. It might be between 30 minutes or something, or maybe an hour or 2 hours. For this one to get back to this level, it could take 2 days. So depending on the type of trade or the trade that you are currently in on, you should know how you rush or how you expect how quick you expect the trade to move. And I hope that is clear enough now because it's not easy to talk. Oh. If you have any other questions, let me know. Let me know. I'll go back to my synthetic now because I'm looking for that particular trade there. You're welcome, buddy. Thank you for the likes. Promise, thank you so much for the like. Promise me, I see you. It is suit you, Abby. Honestly, me, I feel like if you really want to understand trading, and trust me, I am not fighting any trading strategy. Trust me, I have tried all of them. I've been trading for more than 7 years, and I've not been profitable for long. So when I say I have tried all of them, yeah, when I say I've tried all of them, trust me, I mean that I have tried all of them. Price action, support and resistance, SMC. There was a time where I would tell any other person who is trading SMC, so who is trading any other thing apart from SMC, that they are a fraud, that they don't know what they are doing, that they are wasting their time. I've done support and resistance, I've done trend lines, I've done different strategy. I've traded, I've stayed a few days on live section with Donvo. You guys know how he trade now. That one I don't even understand how he's trading is, but he also calls his trading price action. But the fact about all these things is it doesn't matter. It doesn't matter, right? It doesn't matter which strategy you are doing. What matters is how well you understand what you are doing. Because at the end of the day, everybody is trying to make money, and whoever developed any certain strategy probably would have gone through some level of experience to understand it like that, an experience that you probably do not have and you will never have. My experience can never be your experience. All right, you can learn from my experience, but you cannot relate to it the way I will relate to it. So, for example, I might see a trade now that looks very good. It has all the pattern, and I will avoid it. Maybe because I've seen something like that happen before, and it didn't go well. Now you will see it, and based on pattern, you will take the trade and you will lose. That is where experience comes into play. All right. So every trading strategy is born out of experience. You are only learning it and hope with hopes that you can apply it and then gain your own experience to know how you can use it better. And that is where everybody is missing it. Understand? They learn price action today, and that is like after price action, there's nothing else that works. They learn SMC tomorrow, and price action stay one side. Anybody who is trading price action is a fool, it's a move. They learn support and resistance tomorrow, or they go and watch Alex G's video, seeing how he's driving Lambo with support and resistance. They're like, holy grail. That is so there is no strategy that is better, there's no strategy that is worse. It depends on who is using it. The other time I see Abby and Jeff, and you see something tata stars, tata stars. And I'm like, God, which one? This one again. At the end of the day, these people are just making money from it. And you are just busy. You are busy just thinking that it doesn't work, it doesn't work. Who they do who? Now you broke. Them where you say you know they work, them they work for them. Now you broke. You understand? So instead of fighting one strategy or the other, the question is, do you even understand your strategy? If you are called to explain what you are doing, like really explain to a primary 1 year old and make him understand that this is why he might be a little bit confused because it's primary one, but can you use layman's language to explain? You can go to my YouTube channel, look for one live section. I think I titled it. Oh, it was on TikTok that I uploaded that video. I titled it "Layman Explanation of Liquidity," where I will be using all this. I was using all this driver, this that. Can you explain your language to, sorry, your strategy to, in the simplest form? Because it's only when you understand your own strategy that you can be able to break it down to that level. You get, you understand your own strategy very well. That's the only way you can be able to explain it to a beginner, and the person will be like, wow, this is so cool. I never saw it like that before. So I'm not bashing anybody. I feel every strategy is good, but it depends on who is trading it and their level of understanding of what they are doing. You can know how to draw the lines, but you don't have the experience. Boom, you just be missing out on some avoidable trades and all that. And even me that I'm talking to you now, hear it from me. I never sabi finish. I never even sabi reach half of waiting I did think say it dey possible for my strategy. No cap. I dey tell you this thing free of charge. The things wey I dey see say I fit do for this strategy, I never do half. I never I never get that full confidence finish. If not, there are some trades that I've been missing and I'll be smiling. I'll be like, no worry, one day I will catch you, and I know the day afraid to take you. So you see, it's still developing, developing, developing every day. Stop fighting anybody. Stop trying to say everybody just dey learn and na money be our problem. I mean, I wan make money, make nobody even know say I dey exist. You understand? So let's get back to business, Ojari. Let's see. V75 indices is just running away from. Oh, what is this? Market is still all. It's already down here. Hmm. What happened? Oh, so why was it showing up before? And this is the reason why I was not ready to take this buy here. The reason why I was not ready to take this break construction. It's not a structural break. It's not a structural break, so the chances of it holding is very, very low. As a matter of fact, you would be way off taking a trade with this for a 1 to 3 than taking that buy that you are looking to trade. Someone might say, but this thing is oversold. That is what our numerous strategies make us to believe, that when you see a market going down in this direction, you should not be looking for a buy. You should start looking for a buy, not sell, because it's already oversold. Because if you are following this market, you are just predicting the end of this of the trend instead of looking for where you can join in on that same trend. You're just predicting the end of the trend at every level. Alright, so instead I'll just be looking at preferably this one safe, because if I go down to like the 3 minutes or 1 minute, this is going to show up. Something like that. This one. So instead of taking that buy, I would even prefer to take this sell. I know for a fact that I should have like a 1 to 3. Alright. So at this point, I'll just wait for the market to pull back into this area and then I can join the story. And why is this one good? It's in line with the direction. It just broke structure, even though that looks like a clear of liquidity. It just did that there. Alright. So even though it's going to keep going up, I expect a pullback into this area. Sometimes you might not be sure of what you are doing. Alright. You might just do a projection like this and just let it sit. You don't take a trade, you just do a projection, you just watch it happen. If it happened that you are correct, that is to tell you that yes, you are getting it right, and then maybe now you understand the story that the market is about to tell. Now, if this market was to pull up and to break out of this zone, it shows that anything from here to here has been violated, and what you expect now is a retracement, retracement to this one for a continuation. All right, so let's say I terminate this one here. I expect a push back up. Now I expect a drop to that same line, and boom. So if you are a trend line, what is this one do? A new trend is being formed. If you're a trend line trader, you will already understand what I just did. Some people will even draw lines around it. They'll be like, this is a a channel. All right. Trend line traders will do something like this. This is a channel. We are expecting a breakout. That breakout is only valid if it goes above this one, of course. They are expecting a breakout above this one, and then they're expecting a retracement to the trend line. Anywhere it hits the trend line, so somewhere around here becomes their entry point. All right, so all these jargons that I just draw on this box now, if I take them out, you can now see that for a trend line trader, it is either this for a continuation, or this goes above. Sorry, my screen is now a little because I'm too zoomed out, for a continuation. So now with this one, me, I already have open mind to whatever is going to happen in this market. When you are still arguing what is the bias of the market, I just use this now to gather all my information, and I might not be drawing all these lines on my screen, but because I have had experience learning all these formations and all these things in the past, and I've made my mistakes on them, experience is already picturing it in my mind. So I can easily just, like relate to what is being shown on my screen, and then I work with it. So all these things gathered together, if the market now decide to do something, I probably would have already envisioned it happening. And I've seen the end result of something like that happening before. So very quickly I can use that as a reason. So with all this now I can just say, okay, the next target should first of all be this one. So I can take the first trade here. If I get violated, the next target becomes this one. There is no way I do this thing 3 turns and then I will not find one winning trade on this particular pair next turn. So this is only valid if there is a breakout of this structure. This is already valid because there is this breakout. I think it's still going to keep going down, but eventually I expect that the market will come back into the zone. So already I have like 1, 2, 3 moves planned ahead for this particular pair. On the 3 minutes, remember this is volatility indices, so it is not forex pair. Why is this place relevant? Because we are yet to break out of this zone. All right, we are yet to take all that as liquidity. So after taking all that as liquidity, I expect a good reaction. All right, and this reaction is not yet good enough for me. So me, I might be seeing it as, it plays around for a while before giving a break of structure. So you are just like saying you are preparing for a pre-break of this market. That is only valid when there is a change of structural formation, and this is the first structural formation that is being done. So it could continue going down like that until you now see something like that. That is when you should start looking for the buy on the higher time frame. On the higher time frame is going to look much like this. All these ones disappear. They are now noise internally. And you can see on the higher time frame it shows the real intention of those candles. You can see how bearish these candles are. So looking for buys at this level, you are just setting yourself up for failure, setting yourself up for disappointment, because the higher time frame is still not yet agreeing to you. This is the first sign, and it might not be the only sign. Moving on, V75 1X. Let's see if there's any opportunity. I'm still waiting for it to get down here. I really regret the fact that I did not take this trade. I regret the fact that I was not on the chart to take this trade. This would have been a flawless 1 to 6. But let's see if we're going to get an opportunity to get involved in this one here. This is the 15-minute time frame. What I'll be doing now is to be watching for whatever internal structure is following as it's coming down. So I can go down to like the 5 minutes or even the 3 minutes. What do you mean? Means in gold for price action. Which minutes in gold for price action? Price action is the same. You're just like, for me, right? The way I trade it is one pattern and I look for it on every time frame. I start from the 15-minute time frame in most cases, and I end up on the 5 minute time frame. I try to avoid the 1 minute time frame, but sometimes I go down to 1 minute time frame to just get a better view of what the market is actually doing, because the lower time frame speaks the most story, but they are the most noisy time frames. All right. So, for example, all this formation might not be seen on the 15-minute time frame, and you might just avoid it. If you're on the 1 minute time frame, you could easily catch yourself like a one. For example, if you're trading with respect to 1 minute time frame now, your trade would be from here. Your trade will be from here, right, to here. And if you traded just with respect to that one alone, I think that's the area. You would have easily gotten yourself a 1 to 7, even though it looks like it is not possible. You can see it almost came to take you, but it did not take you. So you would have traded and gotten yourself like a 1 to 7. It just makes it risky. But while you avoid them when it comes to trade, you can use them to get yourself in line with the story that the market is trying to tell. All right. Same thing goes here. You see, break below this level. You see, break below this level, reacted to the low. Now it has broken the structure to the downside. All right. So reacted to the low, we broke the structure to the downside. All right. So first thing that I'll be targeting is this: the last reaction. Right. I can draw a box around it. So when the market is coming from the down, I expect to see a reaction from this zone. when the market is piercing into this area. All this I'm doing it on the 3 minute time frame. So it doesn't really matter which time frame you are, just that one pattern that you know, make sure you are seeing it on that time frame, and based on that time frame, where do you think the market is going? So if I am on the 15-minute time frame, for instance, all right, so let's say I'm on on this 15-minute time frame, and based on structural formation, I see this structure. This is to tell me where is the next target. This was the first target for the 15-minute time frame here. Where should be the next target? Again, where that structure formed. So I can now look for that opposing structure on the 15-minute time frame, and this is how I know that the market should at least have a reaction here. This is why I'm waiting for it to get here. All right. So now, when I know that the 15-minute time frame target is all the way down here, when I now see something like this happening here, I am not bothered. I'm not looking for a trade because I know it's just a fake out. Instead, I'll be looking for a way to trade against it, because a fake out is always, you know, liquidity to be taken. So both gold, it doesn't matter what pair you are or what time frame you are. Have one pattern, stick to that one pattern, look for it on that time frame. Then now, once you see where the pattern is leading you to on, let's say, 15-minute time frame, you can now be trading on the 5 minutes. And if you are more experienced, you can trade on the 1 minute with respect to what you are envisioning on the higher time frame. So if I'm expecting that the market is going to go down to 350 on 15-minute time frame, even if I'm taking a buy, if I'm taking a buy on the say if I'm taking a buy on the lower time frame, I will not look for a buy that has to go above the higher time frame. It's not possible. It's not possible. I never see any trade since, so share na see. One of the reasons why to the come life they had with this, I never see any trade since. And now I don't even tire. I feel go off life. I don't teach tire, so I feel just go rest from now till when I see say trade the cook. Maybe late in the night. I think all these things will be ready at that point during the night. You see what I'm talking about? Retracement trades, right? When you are taking a retracement trade, you can see what I'm talking about. Just be ready for all this up and down, all this up and down, up and down, up and down, and all that. You can see them. See, going up and down, up and down. So these are retracement trades. These are continuation trades. There's a different, and continuation trades are always better. Always better. So guys, I think we have enough for today. I will be going off live now, and then I'll come back maybe around 12 midnight or 7 a.m. or 7:30 a.m. tomorrow, so that we can continue from where we left off. So have a nice one, and I guess peace. I hope you learned something though. Before I go, I hope somebody learned something new today. Any other questions before I take my most needed leave? All right, no question. You're welcome. You're welcome. You're welcome. You're welcome. So, guys, both on TikTok and everywhere, I'm stepping off now, and we'll talk again. Do you do mentorship? Yes, I do mentorship, but it's too expensive, so forget about mentorship. You go learn a lot if you just be here. You will learn a lot if you don't do. If I call the amount now, they will say, this small boy they charge more, sure. At $200 flat, and I know they take beggy you, because I know I'm anybody going to disturb me from my DM. Don't need your money, but I don't need it. But I do mentorship. The cost for that is $200 from start to finish. Until you don't be like me or you don't pass me. Yeah, I'm asking you, sure. Since na nyash una dey like to dey see for film, make I show una nyash. See nyash. Yes, e good. Me na job now. I wan show pipu nyash. Wetin dey worry una? Oga make I run now. Talk talk. Make una no vex. Nyash no come. There was train nyash before. Dem no show nyash again. They don run. Very savage people. I wanted to show you people nyash. Nyash did not show. So guys, peace out. I am stepping off now, and I hope we see you again tomorrow. Thank you so much, man. I appreciate it. Oh, so as you don't see me, as you don't see breast, now you don't send gifts. This boy. I don't trust you. Thank you so much. Bye. Why not now? Why I won't go? People come to join. It's not that I want to step off that you people are giving me flowers and joining. But anyways, let's see at 9:30, 9 a.m. tomorrow. Is it 9? Sorry, 7:30 a.m. tomorrow, and we'll continue from there. Thank you so much for joining. Thank you so much for having me, and I hope you learned someone or two. Have a nice day.